Welcome to Markets Now. I'm Michelle Rook along with Joe Vaclavik with Standard Grain, and we are seeing mostly lower grain trade right now. HRW wheat is trying to come back, and the livestock futures mostly higher except for nearby live cattle. But we've had this big break in the grain trade, Joe, and let's talk about some of the factors that are pressing that. First of all, macroeconomic climate is a bit bearish, isn't it?
Well, we had the crude oil market fall below $70 in the WTI this week. There's some infighting within OPEC. OPEC is not happy with Russia, and Russia's an OPEC plus country. They're not an official OPEC member, but they're upset because Russia's selling too much cheap oil on the export market. The last couple of times we've been down below $70, you've seen some sort of headline pop up. Either there's SPR talk or there's talk of OPEC cuts, but the weakness in crude, general broad-based weakness in commodity markets, with a few exceptions, of course. It's all kind of contributing to the weakness in the grain markets. And the other thing, I mean, the big thing that is factual is that the demand for any of this stuff is really not that great. There's nothing good to say about corn demand. Soybean demand has some struggles on the export front. The processing part is still good. And wheat, I mean, we're importing wheat from Europe, so it just speaks to how overpriced U.S. wheat is relative to our competition.
Yeah, definitely a double whammy there. As far as the commodities sell-off or the risk off, is there also concerns that the Fed is going to raise interest rates on June 14th again?
Yeah, the odds have really shifted. It was just a week or two ago that we were thinking, Fed pause in June, right? And now the interest rate markets favor the idea of a quarter point hike on, I believe it's June 14th. It's like a 65% chance, according to the Fed fund futures and the way that they're trading. So that's a shift, and it's resulted in a stronger dollar. A stronger dollar, of course, is negative commodities. None of that is helpful.
Yeah, and last week we put weather premium into the market. This week we're pretty much taking it out on those extended forecasts, aren't we?
Forecast is dry for 10 days for most of the Corn Belt through, say, June 9th or 10th. You really don't have much rainfall. There's going to be some pop-up stuff here and there, not any widespread coverage. The area of contention right now when it comes to the forecast would be this time frame beyond June 10th. Your GFS model is your American model. It goes out 15 days or so. It's indicating some cooler temperatures for the central Corn Belt, along with some rainfall during that time frame. A lot of the weather forecasters might tell you that temperatures are not as hard to predict as rainfall, and that rainfall is very difficult to predict. So if those forecasts, if those rains, say June 10th through 15th, if they don't come to fruition, there's going to be a lot of areas of the Corn Belt that are in tough shape, I think.
Yeah, and the funds, they've been pushing short in corn, especially in Chicago wheat, and maybe are now short in soybeans as well, do you think?
In soybeans, real time, it's tough to say. They might be flat, might be slightly net short. But the big take home here is the drastic shift that you've seen in sentiment among large money managers. It wasn't that long ago that they were long everything, right? And now you're to the point where maybe they're short everything in terms of corn, soybeans, wheat. So the attitudes have shifted. That doesn't mean that we can't rally. A lot of times during June, in particular, June into July, you'll see short covering events if it's paired with some sort of weather type deal. A crop scare event can force the funds out of their short position. That could happen. It's one of many possibilities.
Yeah, and of course, we'd need a major weather event to change this trend here. Let's talk about technical support areas because we've made new lows for the move and especially the soybeans today. Where do you see us finding support in a lot of these markets?
Gosh, well, as we speak here, the bean markets come off of the lows a little bit, which is positive. I'd love to see some positive demand news. I don't know if there's anything on the charts that really sticks out to me here today, given that we've made new lows. What we need to see is some new crop export demand. The new crop book of soybean export sales, it's like the third worst of the last 10 years. China just hasn't been in buying new crop beans this year the way that they typically do during May. We really hope that it starts to pick up in June, because if it doesn't, you've got a serious problem. USDA says new crop soybean demand, 45% of it's going to be exports, and that would actually typically be higher than that, but they're projecting more crush. So we need the export demand. Even though we're increasing crush capacity, we still need the export demand, and for new crop, it's just not there. For old crop, we're way overpriced. That's not even a possibility right now, but new crop's where we need to see it.
Yeah, like you said, we're uncompetitive price-wise, but also China doesn't need us right now when you've got record crops of corn and soybeans from Brazil, right?
Yeah, this is not the time of year that China should be buying soybeans from the United States for old crop. They could be buying corn. As a matter of fact, like in 2020, coming out of COVID, after they signed the trade deal, we saw China buy a whole bunch of corn this time of year. So that wouldn't be unprecedented. A lot of that was mixed between like old and new crop at the time, I think. But corn would not be unprecedented. It's just that we happen to be overpriced relative to Brazil. China's got a deal in place to buy corn from Brazil now. Soybeans, it typically doesn't happen for us again until post harvest, that time slot. And U.S. beans are competitive post harvest. Just we're not seeing the sales, and I hope we start to see them pretty soon.
Joe, is this part of a bigger commodity reset?
Yes, there's absolutely been a commodity reset. I mean, your commodity index is like your Bloomberg index. I mean, it's 30% off of the highs from where we peaked a year ago. So yeah, no joke. There's a big decline in the commodity sector. There are exceptions. You look at live cattle, you look at feeder cattle. There are exceptions to the rule here, but generally speaking, I mean, commodity markets as a sector have been under an enormous amount of pressure. I mean, if you go back 12 months and told people Chicago wheat's going to have a 5 in front of it, crude's going to be in the 60s. I mean, that would have been a tough pill to swallow at the time,
No doubt. You mentioned the cattle market, new contract highs again in feeders and in the live cattle futures as well, but it's end of month. Do you think we're going to hold up here today? Are we going to see some end of month profit taking as we go into the close today or not?
Anything can happen at the end of the month, but the fact of the matter is the fundamentals are still solid. I think a lot of people thought that the cash cattle market might back off a little bit as you got into late May and early part of June, and that just doesn't appear to be the case at all. So I think maybe some people were caught kind of flat-footed here with this cattle thing, but the fundamentals are still good. I mean, the weather forecast is interesting, and some of the rains we've seen out in the plains are interesting. Maybe we're in the process of shifting back toward a little bit wetter pattern in some of these cattle areas, but that's something that's going to take a long time to kind of rebuild,
Yeah, to your point, it looked like packers were having to chase some of these tight supplies in terms of cattle. So do you think they're going to have to do that again this week?
That looks to be I mean, I don't see why that wouldn't happen. This is exceptional. That's not typically what the Packers have had to do in recent years, but it's a different ballgame now, and it's probably going to be for a couple of years.
Limit up moves in lean hogs finally yesterday, and then we got some follow through today. But is this just end of month short covering too here?
That's general consensus. I don't see anything that's shifted drastically in the fundamentals. You saw a big decline in open interest on yesterday during the big limit up day, and I'm assuming you're seeing some more of the same today. The market's really gotten beat up, and even in bear markets, the rallies can be violent and really quick. And the hog market, it's a thin market relative to some of the other commodities we watch, so it doesn't take a whole lot to push this thing around. So if there's a couple of big funds that decide they want to take their money and go home at the end of the month, this is the result.
Yeah, the funds are near record short, so that's certainly a possibility. Thanks so much for joining us, Joe Vaclavik with Standard Grain, and that's Markets Now.